Bitcoin has staged a modest rebound in early September 2025, clawing back the late August sell-off. Over the past 24 hours, BTC jumped roughly 1 to 2%, briefly topping $111,000 and nearly erasing last week's losses. The weekly chart is now essentially flat, reflecting a pause after the mid-month decline. Importantly, the long-term trend remains very strong. Year-to-date Bitcoin is up on the order of 80%. Commentators note that traders have largely shrugged off seasonal uncertainty so far, underscoring a resilient bullish bias. As one recent analysis put it, the long-term bullish outlook remains intact. In plain terms, despite a brief consolidation, Bitcoin's momentum has not collapsed, suggesting bulls are still broadly in control. A closer look at market data reveals why bulls may be encouraged. Derivatives metrics are skewed bullish. Crypto quants, take or buy sell, ratio in perpetual futures has surged to around 1.10, a multi-week high. This means aggressive buy-side volume now significantly outstrips sell volume, condition typically seen during strong upswings. Analysts caution that such extreme optimism can sometimes foreshadow short-term tops. But right now, the market is absorbing the trades without a sharp reversal, equally telling on-chain whale activity is subdued. The ratio of coins flowing from exchanges to whale addresses has fallen from approximately 0.54 to 0.44 since late August. A falling exchange-to-whale ratio implies large holders are accumulating or simply holding their coins off exchange rather than selling. Indeed, during the same period, Bitcoin's price climbed from about $108,300 to over $110,100, which suggests whales were largely sitting on hands as prices rose. In fact, on-chain trackers report a record-high number of large wallets. Roughly 19,130 addresses now hold 100-plus BTC. All these signals point to muted sell pressure from big players, giving the market more upside ammunition. At a technical level, key support and resistance zones have also crystallized. Glassnode heat maps show a thick cost-basis cluster where many coins were bought around $110 112K. Roughly 268,000 BTC were accumulated between about $109,995 and $111,768. Breaking decisively above this range could allow Bitcoin's momentum to accelerate. The single strongest resistance subzone lies near $109,995, $110,583, but the entire zone extends to $111,768. By contrast, there is similarly heavy accumulation just below the market, about 223,000 BTC. Were bought between $108,250 and $108,829. In other words, a solid floor exists around the $108,000 area. In practical chart terms, traders are now eyeing roughly $111K as the immediate ceiling and around $107.108K as the floor. If bulls can clear the $111 to 112K cluster and hold above it, that could open the door to a sharp rally. Conversely, a drop back through the mid-$100,000 range, especially below $107K, would negate the current bounce. One analyst warned that a daily candle closing under $107,200 would invalidate the bullish outlook and likely invite lower lows. Now strong sellers have not emerged, so the $107.108K band is acting as a safety net. But investors will be watching closely. A breakdown would strip away this floor support. Adding to the bullish evidence is a subtle pattern on the charts, a hidden bullish divergence. From late August into early September, Bitcoin's price made higher lows, while its RSI Relative Strength Index made lower lows. This is known as a hidden bullish divergence, which often signals that upward momentum is poised to resume even if price has dipped slightly. In simple terms, it means that despite minor price pullbacks, the underlying strength is holding up. Paired with the subdued whale selling and steady derivative positioning, this divergence suggests the current recovery has room to continue. Technically, the bulls are now staring at resistance near $111,900, which aligns with both the RSI pivot and the cost-basis cluster mentioned. If Bitcoin can clear that zone, the next measurable targets are higher, roughly $117, $118K. About a 7% move from here according to technical models. If momentum really kicks in beyond that, some analysts even envision a run toward last cycle's highs. For example, Cointelegraph reports that flipping the $105,000, $110,000 range into support could set the stage for retesting Bitcoin's all-time high. potentially up near $124 1 to 5K in a matter of weeks. In short, the upside scenario is clear. Break that key resistance cluster, and Bitcoin could surge significantly higher. That said, there are important risks and headwinds. September has historically been a tough month for Bitcoin. Since 2013, BTC has closed September in the red about 2/3 of the time, averaging a roughly 3 to 4% decline. Seasonal selling, often attributed to portfolio rebalancing and tax planning, can create self-fulfilling bearish pressure. Analysts caution that even with the recent bounce, past patterns suggest profit-taking is possible. One strategist from Unity Wallet noted that the current roughly $110,000 level is neither a strong start of the month, nor does it exactly reinforce September as one of Bitcoin's weakest months. But he also warned that sentiment can change on a dime during this historically tricky period. On top of seasonality, macro uncertainty looms. The timing of Fed rate cuts and the strength of the dollar could swing sentiment. A positive scenario is being priced in by many traders. The US dollar index has softened. Bitcoin's 52-week correlation to the dollar is around -0.25, the weakest in 2 years, which means a weaker dollar could boost crypto. If the Fed does cut rates later this year as expected, that could further fuel the rally. Yet those same conditions can also lure profit-taking, as one warning from Delphi Digital notes. Past Fed cuts have sometimes led to a short-term spike, followed by a sell-off. In other words, easy money would benefit Bitcoin overall. But each announcement might be bought and sold quickly, rather than fueling a straight-up move. Technically, there are some caution flags too. The shorter-term indicators are not overwhelmingly strong. Bitcoin's daily RSI is around 44 neutral, and it's a DX trend. Strength is only about 20. An ADX of 20 suggests a very weak trend, basically. The market is coiling rather than charging. Notably, periods of low ADX often precede big breakouts, or breakdowns. The metaphor is a spring being compressed. So on one hand, this could herald an explosive move either way, but on the other hand, it means traders should not take the current drift for granted. In the near term, a decisive catalyst would be needed to break the stalemate. Until then, the market could remain choppy. Practically speaking, the key levels to watch are about $111 112K on the upside and $107 to 107K on the downside. It's a sustained move above $111.50 to 112K could refuel the rally. By contrast, a break below the $105 to 107K zone would put all the current support in jeopardy. In fact, Crypto News notes that if Bitcoin plunges below $105K, it opens the path under $100,000. That aligns with the heat map we cited, once below those lower bands. There isn't much support until $100,000 psychological level. So traders will be watching for any sign of heavy selling that might push BTC through those stops. So far, the largest wallets remain relatively quiet on the sell side. But any spike in liquidations could trigger a rapid drop. In summary, Bitcoin's fate in the coming days appears to hinge on the confrontation at the $111 112K make-or-break zone. Both on-chain and chart-based indicators currently favor the bulls. High futures buying pressure, muted whale selling, strong support clusters, and a bullish RSI divergence all suggest the uptrend may continue. Breaking above that resistance cluster and holding it would likely unleash more buying. With technical targets initially in the $117 to 118K range and potentially up toward the old highs around $124,000 if momentum is strong. The context is not 100% pristine. Seasonally weak patterns, overheated sentiment, and potential macro volatility could spur a pullback. A failure at the resistance or a breakdown below about $105 to 107K would strengthen the bearish case and could send Bitcoin lower in line with historical September drops. Therefore, traders and investors should be prepared for both scenarios. If Bitcoin convincingly breaks the key price level around $111, 112K, it could indeed rocket upward, presenting a significant bullish opportunity. But if it fails to break out and loses the lower support floors, the risk of an extended correction must be respected. Our analysis, based on the latest data and expert commentary, shows that the technical charts and on-chain flows are leaning positive, but not without the familiar cautionary signals. As one strategist put it, a close above this threshold could invalidate the so-called September curse and set the stage for a bullish October. Until then, the market will likely continue to oscillate within these defined zones. Watching the battle at $111K will tell the tale. It's the line in the sand that could decide whether Bitcoin's short-term trend turns strongly upward or reverts to September's bearish bias.